Hi everyone, today I'm going to cover the two new stocks or adding into positions that I hold that I bought into on Monday. So I'll be talking about these two stocks in a second. Before we get to that, thank you so much for coming to subscribe on my new channel. If you can like the video just to get the algorithm on YouTube going on this new channel, it'd be absolutely amazing, and thank you for moving across. But we'll get stuck into the two stocks that I bought on Monday. Now I'm just going to say right now that I still believe that the US stock market is due a pullback and is kind of gone up way too quickly. With the UK stock market, I don't think that's as bad, but the US, I still believe that there should be a pullback. But at the same time, I'm just kind of planning there, if there isn't a pullback, have I still got enough stocks at the moment? Have I nibbled at a few stocks? And I'm still going to be trying to build up a few more positions just in case the stock market doesn't pull back. I'm already in a quite a good position because I did buy quite heavy in the stock market pullback a few months ago now. But at the same time, I'm just planning that if the stock market doesn't pull back, I have bought into a few more stocks. But at the same time, I am still got a lot of cash there to go buy if there's a pullback. But I did take the opportunity to buy two stocks that I thought are still at not too bad valuations really. So the first one is Greggs stock. Now I've been buying this one quite a lot recently and I thought I'm going to buy some more because I just really like this company. And it is my biggest UK holding position that I currently do own. Now this stock is still kind of down at the moment, and my kind of thinking is that this stock is due, or the company is due to open up back soon, and when it opens back up soon, it's a company that maybe it won't achieve the revenue it was doing, but it'll be pretty damn close, and especially with deliveries as well, I think it should do okay. When we look at kind of like when KFC opened up, when Starbucks opened back up, there was such a demand for them that there was queues going around everywhere trying to get into them. And I think Greggs will be somewhat similar. There's a trial going on in Greggs in the up north, in Newcastle I think it is, because I think that's where the headquarters is. There were some trials over there and they seemed to be going quite well, and there were people queuing up there. So the trial seemed to go successful, and it's a company that I see opening up soon, and I think when it opens up it'll do okay. So obviously it's on a 35% discount, which is good, and with it potentially opening up soon, that it should do really well. It's got massive growth, so when we look at the growth potential, it's a company that will carry on growing its EPS, carry on growing its revenue. I really like this company because of the balance sheet it has. It has a fantastic balance sheet, so if anything happens, this company, say worst case scenario, this company has to close down altogether again, it's a company that is in a very good position just to carry on going through its cash pile that it currently has. It doesn't have any debt, so it's not got people asking for money, so it probably won't have to raise that much money, if at all. So in the position wise of the company, it's in a fantastic, really healthy position. When in this kind of stock market with this COVID-19, the companies you want to be buying are the companies that have these fantastic balance sheets and aren't going to be affected by it that much. Greggs is a prime example, and it's down, you get it on 35% cheaper. And the thing that's really pushing me as well to buy into the company is the amount of people that are inside buying this company right now. Even the CEO is buying shares. The company inside, the people are buying this company really heavy, so they must be thinking, this is really cheap for our stock, we're going to do well. They're not going to invest their money if they're going to lose money, and they've got the best idea what's going on inside the company overall than most of us. So if they're putting their money in it, that's a really great sign. So with that, investors as well, it seems like a really good opportunity to be buying Greggs at the moment in time. Now this is a stock I am planning to hold for 2 to 5 years. It's a company that I am aiming to make probably over 100% return on this one. So it is pretty much a long-term hold, and I am hoping to double my money on it. So that's kind of where I'm looking at with this company. I think it's a good opportunity, and the potential wise to double my money over the next 2 to 5 years with this one. I really like it, and it should eventually get back to paying a dividend as well. So I should be also making the money from the share price. As well as that, I think I should pick up a dividend that will also carry on growing, and it should be paying that dividend again pretty soon after opening up. So probably I would say at the start of 2021, that should be where I kind of expect the dividend to come back. So yeah, it's a win-win scenario with Greggs, so I'm quite happy to put some more money into this one. The second one is a little bit of a shocker one. I weren't really planning on to do this one, but I was kind of like weighing up my options in the US stock market. I was like, I just want to buy something small, and I was like looking around at companies that were, sold off, and I was going, they're back at 52-week highs, they're back at 52-week highs, and I was looking at payment companies, and I was like, I really should be adding more payment companies into my portfolio. And I looked at these, and I was like, it's only down about 10% now. PayPal and Square are back at overvalued prices, and I looked at mastercard and I was like, this stock's still down 20%, and I thought I really like mastercard as well. I've always bought Visa because I've always thought it was the cheaper of the two stocks, but mastercard now at the moment is kind of getting a bit of the same valuation what Visa is, but just down a lot more percent, which is really interesting because I like mastercard with their international growth. So with payment companies, I see them easing money because we look at what's going to happen at the moment. Card transactions are going to go up because people don't want to handle cash. As well as that, we've got the younger generation who tend to pay more card than cash as well. And also we have the developing countries that are starting to use card payments more than cash payments. So there's a lot of different things that are going on with MasterCard, and that's not including any other side investments they have. When we look at the actual card industry and payment industry, MasterCard are in a great position to grow. And with it being on a 20% discount, this kind of adds to it as well, a good opportunity to get in. The growth side of it, we've got fantastic EPS, we've got fantastic revenue growth because of the reasons I said. The MasterCard as well, it has a really good balance sheet, its cash pretty much covers all its debt, which is fantastic. And with it having all this growth, it has a little bit of a dividend, which will carry on growing as well. So we've got a bit of a growth dividend here as well. So as well as holding this stock, I'll also be picking up a nice little dividend. So I haven't bought many MasterCard shares, but at the same time, it's a company that I thought I'd just buy a little of because it's a lot. It hasn't gone as much up as other companies, so I bought MasterCard, a little bit of a stock that I'll probably hold for about a 50 to 100% gain. I won't hold this as long term as Visa, just because I really like my Visa position. MasterCard I'll probably hold 50 to 100%, which I think it probably get there within probably a year to 2 years, so I'm quite happy with that investment. I did look at the banking industry because that's one of the industries that haven't kind of gone up, but even so, like, they have sold off. When you actually look at the bank stocks, they're still pretty expensive, so I did look at a few of them and I was tempted. I just still didn't think they were cheap enough. But yeah, MasterCard is another company that I added into my portfolio, so I'm really happy with that one because it's a company which I think is a fantastic company. I would say that MasterCard is probably one of the 10 best US stocks out there to go buy. So I really rate this one really high. So yeah, to kind of get shares in what I think is probably one of the 10 best stocks in the US stock market out there, I'm really happy with that one. So I added some MasterCard for the first time, and also I've added into my Greg's position. But like I say, still got a bit of cash there, ready for if the stock market pulls back, especially in the US kind of stock market, because I still think that's a very rich valuation. So I thought I'd update you with that, guys, and as always, kind of sharing the moves I make in my stock market portfolio, and I hope you enjoyed that. And if you could give the video a like, that's absolutely amazing. Subscribe if you haven't, and I'll see you on the next video.